Folks, welcome to the Contrarian Trader. This is Robert Desmond. It is Sunday, November the 29th, 2009. I can't believe it's past Thanksgiving. Well, anyway, folks, hope everybody had a great Thanksgiving. Welcome back. Look forward to a new trading week. And oddly enough, they came out with some very, very bearish news on Thanksgiving when they knew the market's going to be closed on Thanksgiving and only a half day with most traders out on Friday. Go figure. But who am I, a conspiracy theorist? Anyway, let's take a look at the 3-month yield. You know, I talk about contrarian indicators quite often. And last week, on my last video, I pointed out, if you take a look at the 3-month Treasury yield, it was approaching the lowest that it's been since the Lehman Brothers collapse back in 2008. Now, you have to say to yourself, as we did back then, what? This is big money that's moving this yield down. There's money that's seeking safety in U.S. bonds that are paying, adjusted for inflation, zero. They're taking a loss on the yield. So, what you have to ask yourself, what do they know? What's out there that's going on? And this is a perfect contrarian indicator. And sure enough, early last week, even before the Dubai news came down, I took note that Greece was down big. And Greece is considered an emerging market. It's not a really developed Western economy. You know, it's one of those fragile old economies. So here's your explanation here. People were seeking safety the week before last in advance of this Dubai news. Now, another contrarian indicator, and I've said this these past several weeks now, is the action at Goldman Sachs. For the life of me, I've been waiting for something to come out. I said, something's going on with Goldman Sachs. Something is bigger out there that we don't know about yet. And if you take a look, Goldman Sachs topped out back at 193.60 in August now. August, September, October, November. That's 4 months ago. As the market has proceeded higher, Goldman Sachs has not participated at all. And neither have all the financials. The XLF is down just as much. I'm sorry, not as much, but it's down as well. Goldman Sachs is actually underperforming the XLF. Let's take a look at Goldman on a daily basis. It broke below support on Friday at, say, the 168 level. Now, if it continues, this is a very bearish day here. I watched this sell-off late on Friday, and it closed really weak into the close. If it continues into Monday, if it breaks to a new daily low, you can expect that Goldman, probably by the week's end, is going to hit support at the 157, 158 level. My guess, so realistically, is that they're going to probably spike Goldman on Monday morning. And why do I say that? Is because the volume to the downside hasn't been all that great here. So my guess is that they're going to spike it on Monday. It won't see a new low unless something crazy happens over in Asia. That's what I'm looking for right now, to see how those Asian markets are opening. To see whether or not we're going to follow through on the U.S. markets. From what I see from the futures right now, Asia is going to open up green. Whether or not it stays there, I don't know. But the U.S. futures are pointing that direction as well, pointing to a stronger open. It's very, very early yet. Really just really means nothing right at this point. Anything can happen between now and then. Now and tomorrow's opening. So, taking a look at the S&P 500 on a weekly basis, we're pretty much where we are this time last week. No real action here, okay? Stiff resistance at that 1100 level. But one thing that we must point out, although I'm a bear, I have to be rational. I'm not going to kid myself. I was bearish on the market when I saw that this volume to the upside was declining rapidly. And I have to say, we don't rationalize volume here. Granted, it was a short trading week last week, but still, the trend was still in place, and we had declining down volume. So what that tells me is that the probability, absent a geopolitical event, the probability of a consolidation here is more than likely. And then, if it is going to break, it's probably going to break after the first of the year. I'm going to predict a consolidation going into the holidays. What I would like to see, and let's take a look at the RTH as a perfect example. Sorry, the IWM. IWM here, you're seeing it It declined last week. It's found resistance at the 60 level. Now, the previous high was 62.61. If we see a continuation of this sell-off here, the $55 level is going to be the next support level. If it breaks that 55 level, you're going to see the NASDAQ really sell off hard here. But my bet is that we're not going to see that right away. My bet is, due to the volume here, that we're going to see either a sideways consolidation with an attempted rally back up to the 62.50 level. Will it get there? I don't know. But that failure, if it does fail there, fails to break out, and it begins to roll over once again, especially if it sets a lower high, that's your time to get short, really short. And I'll probably dump the rest of my long positions and just get that short. And hopefully that'll happen around that week between Christmas and New Year's. So let's see what happens there. RTH, what's keeping it up? As I said about Rocky Balboa, what's keeping it up? I have no idea. But one thing we must keep in mind is that the up volume declined dramatically last week. You're not seeing a follow through on the stochastic RSI above that 1.0 level. You're not seeing that. You're seeing a lower high. You're seeing a divergence on that on the stochastic RSI. The MACD looks ready to go negative. Okay, can it hold on here? Can they spike it again? Yes, they can do whatever they want. The closer we get to the holidays, Christmas, Hanukkah, New Year's, the more you're going to see volume dry up and the likelihood of a major correction decline. The probability is that correction, if it does happen, which I predict it will, is going to happen after the first of the year. So now is the time to watch. Pick the time that you want to get into a short position and trade smart. Don't trade on don't trade on emotion right now. Just play it smart. This time of the year is generally a bullish time of year, and at the very least, they'll probably keep this market going sideways and probably have better entry points rather than selling into getting short into a down market or down morning. Okay, they'll probably rally it back up into the afternoon because volume's so light. They can do whatever they want. They can completely manipulate the market just by computerized trading alone. The bosses go on vacation. They flip a switch and they strike a bid and they keep the market up. U.S. dollar. Early last week, it looked as though it was going to break down and head down towards these 2008 lows. It found support off that 74 level. What really drove it was a flight to quality from the Dubai news into the U.S. dollar. As deeply as we are in debt and as weak as the dollar is, we are still the United States of America, and we are still the most solid economy in the world. So that's not lost on anybody, even despite this massive sell-off in the U.S. dollar. We are still the most sought-after, safe economy in the world. That's the reason why we're able to sell our treasuries every week, week after week, billions and billions of dollars. So, folks, I'm going to keep this brief this week. The only other thing I'm going to touch upon is the VIX. We saw a flight to safety last week, people buying insurance. This was being forecasted, not just by the Dubai news. It was forecast. Look at this sell-off here back in late October, and you saw the RSI come down, touch the bottom, about the 30 level. Right? We came down. We actually broke that support level and headed lower, yet the RSI didn't confirm that downtrend, and it actually made a double bottom here, and it spiked up like a hockey stick on Friday. Will it continue? I don't know, but I don't think that we're going to see a breakdown here of the VIX. I think what we've seen here is a double bottom, a W formation setting up, and if it breaks past this 3184 level, that's when you're going to start seeing a major correction in this market. So please, be careful to the long side, and those who want to get short, don't get too anxious here, okay? Pick your times. Pick your times to get in on these trades. You're going to have better opportunities. Mark my words. They're going to manipulate this market, so don't get too anxious. Folks, for those who want to join the Contrarian Trader, please sign up for a 14-day free trial offer. Take advantage of it. You pay through PayPal. You're not paying me. I don't see your credit card information. But please, give us a try. And if nothing else, please subscribe to our channel. If you have any questions, please email me, bob@contrariantrader.com. And again, I hope everybody had a great Thanksgiving. Look forward to hearing you from your emails. And that's it. Have a great trading week, folks. Bye-bye.